What is up, guys? Did you miss me? Gone for a week and you guys send the market to new lows for the year. What's going on here? So, welcome back to another CMT Lunch Hour. I will be your host, Larry Thompson, resident CMT on Fridays. I was about to come on the show today with no shirt, right? Because people starting to get margin called, right? Gonna have to start selling the things in my house. These books might end up at a pawn shop here in a couple days, but we shall see. So, welcome back to another episode. Got a lot of things to get through, right? It's been messy. These are the times I love to be sharing with you guys how I manage risk and how I think about the markets, because it's easy when stocks are going up to be a genius, right? Don't mistake brains for a bull market is what they say. So what we'll do today is we'll break down the S&P 500, look at what's next for it, right? Kind of take a look at the price structure that I've shared over the weeks, right? We draw those lines in advance, right? We manage risk on the way up. That way on the way down, we have a game plan, right? Just like football, just like any other sport, you watch the tape, you study the tape. Next thing we'll go through is just some of the lessons I've learned through the time of being a CMT of how to look for signs of a bottom, right? Because at this point, that's what we're looking for, right? We've seen that the market's kind of toppy-ish. Let's kind of see if we can find a bottom, right? And what does that look like? And then, of course, chat. I see people in the chat right now blasting tickers. Keep it coming. In the chat, I'll be sharing charts of any chart requests people have, right? So we'll walk through a ton of chart requests, longs and shorts. I know some people probably want to be shorting the market here. Some people might want to be getting long the market here, depending on the time frame. So we'll see what that looks like. And then lastly, chat, I'll be sharing my favorite setups. Honestly, it's minimal right now, but we'll get through a few of them because I think in general, there's a time to be long, a time to be short, and a time to just sit on your hands and chill, right? Maybe start to get outside. I heard it's 50 up there in New York this week, right? I'm down here in Greenville, South Carolina. It's in the 60s. So let's kind of get into it, huh? First chart we'll take a look at is just about over a year of data for the S&P 500, right? It's not year to date. This is about 1 year. So taking a look at the S&P 500, right? This is a chart I showed 2 weeks ago. We were in this slap chop zone, right? 2 weeks ago, we heard a lot of people talking about new highs, new highs, new highs. You don't make money just because a market makes a new high. You make money when a market makes persistent new highs, right? I know we have some golfers in the chat, right? Anyone can hit the ball good once. What makes you a pro? Hitting the ball good consistently. So we need consistent new highs. And so what's happened? This is what's happened since, right? Failed breakout. From a failed breakout came a fast breakdown, right? But notice, I shared this chart 2 weeks ago. What do you notice, chat? Those risk management levels, right? You notice those levels haven't changed, right? Because on the way up, you draw your levels to where you want to get out on the way down, right? You have to manage risk because that's what this game becomes, right? It's boring on the way up. Larry, shut up about managing risk. I just want to be long AI scam companies that are up 100% every day. But this is where we learn, right? This is the time to kind of study and learn how to manage risk in the market and protect some of those gains you worked hard for, right? You should be managing risk because it's a practice in self-respect, right? You should respect yourself enough to want to hold on to the money you worked hard to earn, right? So that's what risk management is all about to me. It's about respecting who you are and what you stand for and what you worked for, right? So looking at the S&P 500, we had this choppy price range, right? It was choppy here. Choppy, choppy, choppy. And then we kind of broke below 580. I closed out a lot of positions last week, right? And then right now we're kind of sitting at this 560 area, right? Right on that 200-day. 200-day is just a level of interest, guys. I wouldn't get caught up in it as a whole. It's not some magical indicator. None of those books behind me call it a magic indicator. Those who truly study technical analysis understand it's just a point of interest, and it signifies a longer-term trend for market participants. So once we get below that, the way you look at the market just kind of changes. It goes from buying the dips to potentially selling some of the rips we get, right? When we start to get that upside, maybe you lighten your positioning if you hadn't already. Or you maybe look for a bottom and we start to carve one of those out. But that's kind of how I look at the market, right? So right now that 560 level is key to me. I would love to get back above 580 and I would re-add to some positions. Maybe if we start to see some price follow through here, that would be key. But for now, it's hands away. Let the market do its thing because I've already managed risks. I'm already sitting in some cash. The things I would also say here is, how do we assess whether or not we should be getting short, right? There's a ton of ways to kind of assess whether or not you should be getting short. But when you kind of look at this chart here, what I like is the same chart of the S&P 500, but on the bottom panel here, I have percent above a 20-day moving average. So what we're looking at is just short-term trend breadth measures, right? And so the market's choppy, so the trends, right, have kind of dissipated. But what we see here is there's not a lot of meat left on the bone to be shorting at this level. Can the market go lower? Yes. But I think right here what might happen is we've had such a strong down surge that you might see the market start to chop sideways for a little bit. You might see this turn up a little bit. Then maybe that next downturn you try to get short. But right here to me, it just seems like if you were going to short, you should have shorted that failed breakout. Or if you want to be short, stay short below 580. But just don't expect right now the market to just, I wouldn't expect it just to crash at this point based on kind of some of this analysis. Can it? Yes. Right? But it's just statistically not normal to. And I just play the statistics games when it comes to this stuff. So just using this kind of breadth metric, I would just say, maybe just sit on your hands for a little bit. Let's see if we get some downside follow through below 560, right? Probably take off some more, continue to add to our cash positions. But maybe, I think here, maybe, right, we might just kind of trade sideways for a couple of days. Let this news that we've built up kind of just go through the market and kind of see how that pans out. But it's been messy, guys, right? Like this isn't a new thing. And that's what I hope, guys, that have been here, right? I see someone in the chat saying the market's kicking their ass. I get it. Like, I'm glad you joined the chat because, look, I want to show you guys a chart real quick. I know I'm going quick here. But this is the past 3 months of equal weight sector returns, right? So this is all the equal weight sectors in the S&P 500. This is 2 days old data, but not much has changed other than more downside the past 2 days. What I want to highlight here is all of these equal weight sectors are negative over the past 3 months, right? So the start of December until the start of February is 3 months, right? 1, 2, yeah, I got my math right. And so what we want to think about here is that if you were doing the work underneath the surface and you were doing your analysis and not just anchoring to year-to-date returns, you were doing a systematic scheduling of reviewing the market, which is what I do here, is at the start of every month, I look at 3-month returns, right? So the past 3 months have been kind of messy. So that kind of shows me that, hey, this isn't a new thing. The market's been choppy. And so your expectations should be accustomed to that, right? To expect that chop, right? And that's kind of what we've seen here. You guys have seen this chart if you've been in the chat. Go back and watch a couple of weeks ago. Go to my Beehive and read some of my recent articles. I've talked about the S&P 500 new highs and new lows being messy, right? And what we saw the past week or so is we've seen an expansion to the downside and new highs, right? You can kind of see it here. It's not significant, but it is significant in other areas of the market. So the question then becomes, right, is if we know structurally the market has been up for a while, we know we're probably in the third year of a bull market in terms of a secular bull market. The next question is, okay, well, when are we going to bottom, right? So what do we look at to know if the market is close to bottoming? And I would say there's 2 practical things I like to take a look at to know if we're going to bottom. One of those is capitulation. So what I like to look at is new highs minus new lows in the NASDAQ and NYSE, because those are very broad-based, right, exchanges. They have a ton of stocks in both of these exchanges. And what we want to look for is capitulation, which means everyone's selling everything, everyone puking up their stocks, right? And so what you see here in the NASDAQ is this past couple of days, we've seen an expansion in new lows. This looks capitulatory to a degree, right? NYSE, expansion in new lows. And then we kind of see the new lows start to shrivel, right? But this looks capitulatory. The problem is you don't know whether or not this is the start or the end, right? Like, is this the start of a downturn or is this the end of a downturn? And that's where we look at some sentiment data, right? So first thing we want to see is capitulation. We want to see people puking up their stocks, right? That's normally a sign that if everyone is selling, who else is going to be left there to sell, right? Everyone becomes a buyer once they've sold. Hand up, right? Like I've sold a lot of my stocks once we had that failed breakout and then we got below 580. I sold a lot of my like index positions. So now I become a buyer or a short seller, right? But at the moment, right, most people try to be long the market. It's just how the market works. And so that's what we look at. And so then the next thing we want to look at is maybe some sentiment data to see how people are thinking about the market. Because if there's a lot of pessimism, you have capitulation and pessimism. That is a recipe for a bottom. And you don't want to be one of these people that just because one person on Twitter gets bearish, you're like, oh, I'm bullish, right? You want to wait for price to get you back in the market. So if you look at AAII survey, right, we've had expansion in bears. Right, 226, we had 60% of the AAI survey respondents were bearish. And then March 5th, 57%. And then, so you look at this 1 year bearish high, that occurred 2 weeks ago. So the most amount of bears from an AAI perspective was 2 weeks ago. So to me, it's like, okay, we have some capitulation, we have some pessimism. What's next? The most important thing. Chat, what's next? Does anyone in the chat knows what's next? So we have capitulation, pessimism, and then the last one starts with a P. Price, right? We got to see price. We got to see price upside follow through. One ways we look at that, chat, is we want to look at maybe some shorter term price levels, right? So look at the S&P 500. This is 65-minute candles. There's 6 of them a day. Don't worry about this silly math I do. But long story short, 6 of them a day. Right? So 6 times 5 is 30. So this is a 30-day or 30 candle moving average, which is essentially a 5-day moving average. What we want to see is we want to see price get back above this EMA. You can see ever since February 21st, the market that's served as resistance, right? So we might have capitulation, we might have pessimism, but how do we make money? Price. So we need to see price get back above this synthetic 5-day EMA, which what's that line up with? 579. Lines right up with 580. Those who want to short in the chat, the other thing you might see here, right, is maybe if we get rejected there, that's then when you put on a short, right? So either way, this next rally is going to tell us a lot about the market, right? Whether or not we start to see some follow through to the upside, because we've seen a couple bounces and then what have they done? They've gotten sold. So that's where if the trend is changing, you want to sell the rip or get short the rip, but we shall see because there is capitulation signs and there is pessimism. And so that's kind of how you build a wall of worry. You've probably heard that term before, right? Wall of worry. We're building that wall of worry, and that's typically bullish for the market to a degree because then it has worry to get over. Once you have worries to get over, people start to believe in the market again, right? People start to get long again. We will see this get back above 580, right? But until we get back above 580, I don't see any reasons to kind of be fighting the downside at the moment, right? So that's kind of what I'm seeing, chat. I'm going to start to get to the ticker, so keep posting them. I know I haven't gotten to any of them yet, but trust me, I'll rip through them pretty quickly. So keep sending the tickers in the chat. Next thing I just wanted to highlight was Bitcoin, right? We've seen this chart. I've shared it a lot. I'm bearish Bitcoin. Actually, I'm short Bitcoin right now. I'm short Bitcoin under a 90K. So against 90,000, I'm going to stay short Bitcoin. You can see here this RSI 50 has become resistance. That's typically the sign that the bears are in control of momentum. And so there could be some downside follow through here, right? You're seeing a short-term higher lows, but I think this is a sell the rip. But like I said, I have really well-defined risks. We're currently at what, 87,000? So I'm not risking much here doing that. I see someone in the chat says, and how understanding the VIX helps us decide. Yes, the VIX is also a great indicator when it comes to pessimism and right. So I'll take a look at the VIX here in a minute. I think the VIX can be overplayed by people. I think there's a lot of data that at the end of the day, you don't make money trading the VIX, you make money trading price. I mean, there is some derivatives of the VIX, but in general, right, it's price. So the VIX, exactly. The VIX is another indicator that we could use, right? When that gets to extremes, there's typically pessimism in the market. So good call there, Dennis Golf. Good call in the chat. So let's take some chart requests and then I'll get to some of the charts I want to look at. But just kind of wanted to highlight for you guys. I think it's messy here. The S&P 500, right? That 560 is probably my next level I'll be managing risk against. Look for some messy price action against the 200-day. It's probably just going to be messy here for a little bit. So just be patient. Let things come to you, right? Manage risk in the process. Look for signs of short-term support kind of regaining control here. Let's get 2 days of green in a row, right? Like, think about it, right? You don't have to overthink this. In order for the market to get back to 610, it has to go through 580. So you're not going to miss it if you don't get long right now. You're going to miss it if price starts to go up and you don't get long. So just take a deep breath and just take your time with this. So chat, I see a bunch of tickers. Thank you guys for sharing them. Healthcare seems to be coming back. Is it a good hedge? Great question. I'll actually share the healthcare chart. Let's get into it. All right, let's crank out some charts, huh? Oh, let me zoom in, right? Let's zoom in here. I already got a healthcare chart marked up. We'll start there. Why not? Actually, let's just start with all the S&P 500 spider sectors. Energy, it's a mess below 95, right? Don't touch it. Staples, right? Staples actually look pretty good. They're kind of building this base here, which is defensive rotation. So this might be an area you want to play and think about Kroger, Walmart, Costco. Those are some good looking names. XLK, right? That failed breakout against 230. That was kind of our level in XLK. Messy below there, right? We had these fake outs, but this don't look like a fake out. This looks like some downside follow through. That's one of the larger sectors. Here's that healthcare chart for you, right? Stockolator, that's a funny name. Stockolator, here you go, right? Healthcare looks like a good hedge. I would say so, right? Look at the relative strength in this bottom panel for healthcare, right? You see it kind of made this turnaround. Also, I want to note here, the reason I mentioned that the 200-day, it tends to be messy is look, messy price action around its 200-day, messy. And then we kind of want to see that resolution. And look what I noted up here. You guys see this note up here, right? Let me zoom in a little bit. RSI 50 turning into support, right? That's the exact opposite of what's happening right now in Bitcoin, right? So that was kind of your signal here that the market is starting to be favored by the bulls in something like healthcare. So I think healthcare, right, if you have to have exposure to the S&P 500, look at some names within healthcare. I don't think it's a bad place, but I would just manage risk against this 147 level, right? Right. Consumer discretionary, failed breakout, pummeled, right? Energy, we talked about. XLB, no reason to be in materials. They're a mess, right? Kind of in this choppy range. Communication services, right? This is a theme in the market. And this is what we've been highlighting for weeks is the fact that if the S&P 500 is not making new highs, it means this is no longer going up, right? Like this is no longer going to making new highs. That's why, right? That's why this chart, wasn't making new highs because the breakouts to the upside were failing. Because if we kept breaking out to new highs, this would have kept going up. But this kind of gave you that warning sign that stocks weren't resolving higher and that we were in a choppy environment. So maybe you start thinking about managing risk. You might not be taking as many trades in one direction. So just something to think about here. I see the chat popping a lot of Tesla. We'll get to Tesla here. Let me share this tab instead. But this communication services, right? Financials looks just like that. Where's my financials? Oh, right? Financials, failed breakout. This is a common theme in the market. There's failed breakouts. That was the short trade if you wanted to get short, was shorting that failed breakout. But that's what we're seeing. Messy price action at the sector level. Industrials testing their 200-day. I don't like to see that. I know this chart's a little messy, guys. Let me get you a clean chart. Right? Industrials testing this 200-day. That's what this red line is. Let's make that a little bit darker. Boom, boom, boom. Let's make it gold. Right? Industrials breaking down is not bullish. It's not what we like to see. But just wanted to highlight the sectors, man. It's messy at the sector level. So let's kind of dive in. Tesla. All right. Guys, Tesla's a bummer, right? Kind of a messy looking chart. Had that failed breakout. 400 was the level I really liked in Tesla. But let me show you some of these. Let's walk through the mags, right? People want Tesla. Let's start with the Apple. Let's just walk through all the Magnificent Seven. Apple is pretty defensive. Stockolator, you were talking about stuff to hedge, right? Apple kind of functions as a defensive stock when it comes to tech, right? Like, Apple's holding up really well on a relative basis. Look at this relative panel in the bottom here. Apple's holding up pretty well. And then when you look at Apple relative to tech, right? AAP, if you look at Apple relative to tech, let me put this in this bottom panel, right? XLK is technology. Look at this bottom panel. Apple's making all-time highs relative to tech, right? So XLK, right? Apple versus XLK, you can ignore this right here. But it's making all-time highs. So if you have to be in tech, you guys have to be invested. I mean, Apple against 235 isn't bad, right? Like if you have to be in something, right? But let's get to that Tesla chart, huh? There she is. This is my level to manage risk against, guys. This 280 level, right? We're kind of below it now, but what did we had? We had that huge failed breakout, and now we're below 280. I'm not long. I can't be in it, guys. Right? I'd be willing to buy it higher. I'll just buy it higher, right? We like expensive things. So I'll just wait till it gets back above 280. I don't really see a reason to be long here, guys. Right? We're reaching this oversold level. Right? Don't buy stocks because they get oversold. Buy them when they go from oversold, they get out of oversold. Right? If you were being a dum-dum, right? Mr. Dum-Dums. We got some dum-dums in the chat, right? Of course we do. You look here, oversold, right? Look, it dropped this last oversold, right? Oversold, oversold, oversold. Oversold is not bullish, guys, right? It's bullish when we're in a strong uptrend. But this is choppy price action, right? The past year has been choppy. This is pretty much sideways since last June, right? And that's why people say don't mistake brains for a bull market, because a lot of things work in a bull market. But when markets get choppy, you just got to manage risk and understand you might not make all your money today, right? You got to make the money when it's just like any other business, right? When the sun is shining, that's when you should be making your money, right? When does Texas Roadhouse make its money? Friday nights, right? Golden Corral, right? When all the people come out on Fridays, right? Or the weekends, right? For a lot of restaurants. Taco Tuesday for the Mexican spots. Shout out Mexico. So good looking chart and good looking name to kind of keep an eye on though, because below this 280, we don't really, no reason to be in it, right? That's a 40, almost got cut in half from its highs, guys. It's tough to see. Tough to see. But, right, you're a long-term investor. Let's zoom out here, right? Long-term chart, right? We had that failed breakout. That's what we had. We had a failed breakout, which is the theme of this market, which is why a lot of that S&P 500 names are trading sideways. I see someone has Meta and Avago, right? I'll just walk through them all. Let's just walk through all the Mag 7, huh? Look at Mags, MAGS. Right? It holds all of these roughly equally. NVIDIA, Google, Amazon, Meta, Tesla, Apple. Look, below 50, stay away. Stay away below 50. Just let it be someone else's problem. You can always get back in. Set an alert on your favorite website, your favorite system you use. Once it gets back above 50, swing the bat, right? Swing the bat if you guys need to above 50. But just let it be right now. And that's what I would say about a lot of these, right? Let's someone mentioned Meta. Right, I got two meta charts. I got a couple meta charts here. I got a lot of meta charts. Where's my other meta chart? There it is. Right, so looking at meta here, look, it was already edited before you guys joined, right? That was my level. I'm not in this. I thought it might be able to bounce against 640. It didn't. Just leave it alone. It broke this uptrend. Leave it alone. Leave it alone, right? It's like that girl. Everyone tells you to just leave her alone, right? She might look cute, right? She might have been good looking in high school, right? But this ain't high school anymore, guys. Leave her alone. But we might find support against 600, right? That would be the level I would look for support against, is that 600 level in Meta, right? Maybe we start, but what did we talk about earlier? Follow through. So guys, what I recommend doing is with some of your charts you guys have, use a shorter time frame, right? Let's look at a shorter time frame if you're looking for entries, right? So here's a shorter term time frame. This is 65-minute candles. And then put a moving average on it, right? This is the 30, like I said. So this is that 5-day. Wait for it to get back above here, right? Wait for this chart to get back above some short-term levels where you can manage risk against, right? So wait for it to get back above here, because you can see in this chart that everyone's been selling these rips. Sellers, right? So, right, you get this bounce. Wait for a couple closes above here before you start going long. There's no reason to rush into these things right now. But good eye there, right? Good eye from beat to sheep, right? Good looking. I mean, this is what we want to take a look at, right? So keep the tickers coming. I'll keep looking at them. Chat's buzzing with tickers. Let me keep going through them. I see a lot of Mag 7 names. I assume people are in them. NVIDIA. Guys, go back and watch 2 weeks ago my show, around 41 minutes. I talked about getting short this, right? I actually talked about getting short NVIDIA. For those who were there, it was awesome. But what did we have? We had a strength, right? We had this bounce against the 200-day, and then the rip sold, right, against 140. That was the level of interest. Failed to get back up there. That's where you get short. Downside follow through. Leave it alone. Leave it alone. Even if we get a little rally here, it's below its 200-day. So this thing could stay messy for a long time, right? What else is near its 200-day and has been messy for a long time? Chat, what other Mag 7 stock is near its 200-day and has been messy for a long time? Anyone know? Anyone know in the chat? Someone said Uber. No, not Uber. Let's zoom out here. Microsoft. Look at Microsoft, guys. Right? Choppy sideways. Got below that 200-day and it's just been messy. Right? So this is what we're seeing. We're seeing messy price action. So just got to manage risk in these types of names. All right. Let's get back to some of these charts you guys are recommending. That's my review of the Mag 7. DNLI. Don't know what we're doing here. Right? This looks like a downtrend to me, fellas. Right? Maybe someone's trying to be cute. Who is this in the chat? Morteshiker. I don't know how to say that. You guys have almost crazy names. Right? Is this what you're trying to do here? You trying to be cute here? Right? I assume we got some cute guys in the chat, right? Some cute folks. Right? Okay, cool. Long against 16. If that's what you think's gonna, if you think this bounce is gonna happen again, you got a good level to manage risk against. I don't hate it, right? You're probably shorter term, I would assume, right? Against 16 bucks is probably your level. I just would get out as soon as you get below it, because this thing could continue to crash. But 16 is kind of that level I would be taking a look at. What else? HE in the chats. Hawaiian Electric. Someone talked about this a couple days ago. I actually like this one. I was talking about this earlier. Yeah. Good looking movement, right? Above this 200-day now, right? Against 10 bucks, I like it. I think you got good levels to manage risk against this $10 level. You're seeing this RSI turn into support, right? Like we've talked about. See how RSI 50 turned into support here? SUPPOR. Getting some spelling lessons today, huh? Check it out. Don't hate it. Good one from the chat. Clap it up for the chat. You guys are finding some stocks that are going up in price. I dig it. Yeah, Microsoft, good call, balancing act. Yep, NVIDIA, messy. Root, let's take a look at Root for Anthony. What y'all think about Root? What the hell? I don't know how to type today, huh? Root. That's a base, baby, huh? Good looking base, right? But like most things, right? Most things are down right now. But honestly, I'd keep an eye on this one. I think you got your head in the right places, Anthony. Right? Big base. Head's in the right place, Anthony. All the supply is kind of down here. There's not a lot of overhead supply. Look at that. W in the chat. W. W's. W's. W's in the chat. That's a good looking chart. I don't hate it. Right? Kind of have this base on base action. We'll zoom in a second. I'm just kind of showing you guys the overall structure, how I think about the overall structure of this chart. Right? Base on base. Okay. So we know that's kind of the level on a zoomed out perspective. Then let's just zoom in real quick. Check it out, Anthony. Right? There you go. Let's draw some levels and manage risk, guy. That's what we're managing risk against. Don't overthink it. Right? You can always get back in. But there you go. That's what I like to see. I dig it. Good looking chart. Root against 115. That would probably be my risk level. Kind of have this failed breakout, but you're seeing that in a lot of the market. I don't think that's something to like deter you per se, right? Like this is a game and no one's making a lot of money right now. Like there might be some liars in the chat, but in general, this is kind of what we're seeing. So keep the tickers coming. Root, good looking name. That's a good one, Anthony. I dig it. I dig it. Uber, got a lot of Ubers. Let's check out Uber. See, Uber's one of these names, man. It was a darling the last year, and it's kind of just, it was a darling for a while, and it's just kind of built this little base action, right? Kind of against this level here. It's hard. It's hard. What do you? Right? Just like most things right now, right? This is not a market that's like filled with opportunity to be getting long. I just showed you a lot of things are down the past 3 months. That's kind of how I see it, right? I see this little choppy zone. We're building a base though, right? On a relative basis, you can see down here, this is a relative trend. It's actually outperforming the market, right? So if you have to be in something, right, I maybe wouldn't sell my Uber, right? I would maybe keep that positioning on if that's a name you're in, but when I zoom in, it's messy, man, right? Like this is just messy price action, right? Maybe stay in above this 70 level, right? You kind of see, you see some moving averages near it, but it's messy because it's close to that 200-day, right? Because institutions and the long-term trend is the long-term trend is up, sure, but like this medium-term 200-day, which is a measure, is kind of choppy. And even look at RSI here, right? RSI is at 51. It's messy. So just not a name I'm necessarily interested in at the moment. But overall, it's holding up decently relative to the rest of the market. So I wouldn't necessarily get out of it. People are going back to the Mag 7. People want Google, Amazon. All right, I'll take a look. Alexa Trejos, I'll get to your tickers here in a sec. Let's go back to the Mag 7. I'll just finish running through them. Oh, look, Apple kind of working here, right? I like that level on Apple. Like I said, Mags below 50, leave it alone. If it smells like cologne, leave it alone. Okay, Amazon. See, this one's tough. You know what's funny, guys? I see everyone on Twitter, like you guys saw these levels are drawn in advance. 200 is that big level. And then I see people on Twitter look at this chart, and then what do? They do what every person does. They put the 200-day on there. And they're like, 200-day, it's a big level. Sure. 200-day just happens to coincide with 200, which is a big level, right? So if Amazon is something you're interested in, you have to just manage risk here against, I just wouldn't be in it below 200. I hate to say it, right? Wait for it to get back above 200, get a couple closes above it, and then I love it. I would love to be long this name near its 200 day, right? But right now its price action is just like it's in the turd, right? It's down here. It's a knife falling. We don't need to touch it just yet. Let it set up and get back above 200, and then I like Amazon. So OG Life XX, Amazon above 200, below 200, you can get a short. Go ahead, take a short below 200, but I don't know if there's a lot of meat left on the bone. After a day like today, you're kind of seeing a doji candle, right? And so I don't know if there's a lot of meat on the bone after today for that type of name. Avago, right? Broadcom. You saw these levels were already drawn. Okay. Okay, chat with the W's. Wasn't this thing up like 15% this morning? Now it's up 5. See, I don't know about this one. But against 185, that's your risk level. If it gets below 185, don't touch it. Leave it alone. But that's kind of your risk levels, 185 in Broadcom. We'll see what it does. I think, right, it had earnings. People need to put money in something, I guess, and they looked at Broadcom, but still think it's a mess overall. MATT. Someone wants to see. Is it MATT? Or is it just MAT? Mattel? Is that what somebody wants to see in the chat? All right, we'll take a look at Mattel. Mattel doesn't look bad, chat. Right? Didn't fill its gap yet. Don't hate it. Don't love it, but don't hate it. RSI 50 is holding up here. So not bad. Not bad. Not my favorite name. CDN Road Warrior. Yeah, it got sold, but I think it's a winner from here. Avago. Okay. Yeah, I don't hate your view. I think against that 185 level, doesn't look bad, right? Someone wants to see the hood chart. Let's take a peek at hood. Yeah. Hood is the poster child. Actually, I wouldn't even say hood. I would say there's a lot of charts that look like this right now. This is the most common pattern in the market, guys, that I'm seeing from a momentum stock perspective. Let me show you. Right? So when I think about momentum stocks, I think about this ETF. Let's pull it up real quick. This First Trust IPO index. Bow. Let me share this one with you. Right? FPX. So when I think about that hood chart, I think about this chart. Right? These are those momentum names. This had huge exposure to AppLovin and Palantir. And right, look what we saw here. Right? Failed breakout. Fast move in the other direction. Right? And this is exactly what hood did. This is what a lot of these charts did. Right? They got up. And then this is why you manage risk, guys. Buying breakouts is a beautiful thing, but you got to get out if it gets back below this level. Right? You got to get out because this is what can happen. And that's why breakouts are beautiful, because look, right? This is why we buy breakouts, right? So say you get long the breakout, right? Let's zoom in real quick, right? Let's zoom in. Okay. We're zooming into the chart. You get long the breakout here. Okay. Right? You're looking at the daily chart. You see this base building. Right? This is what you do. You get long the breakout. Don't blame you. I probably would have too, right? And then, right, so you get long the breakout here. You get this close above. So you get in, say, 132. Nice. Okay. Runs 7%, right? But then it corrects, right? And you would have broke even. But then you were like, oh, I'll hold on. So then you lost another 18% of your money because you didn't want to manage risk, right? Because you thought you were missing something. Don't do that, right? Respect yourself and manage risk against these levels. Chat, we got a couple more tickers coming through. Keep them coming. I like the charts we're seeing, but Hood, right? I'm sure it looks similar to this, right? Similar exact setup, same exact thing, right? Now you're kind of coming into this $40 area, right? Coming into this $40 area on Hood. Just kind of draw it bigger like this. All right. Below 40, I wouldn't touch it. But maybe we find some support here and bounce. But this is what we're seeing in this market, right? Some large drawdowns, right? So we want to see that follow through like I talked about at the beginning of the show. But right now we're not seeing it, guys. So that's something we got to wait for as kind of these stocks start to unfold. But yeah, chat, I appreciate the tickers today. Cranked through them. I think, right, it sucks. Everyone wants to see the market go up, but sometimes it isn't. But let me share with you a couple charts that are going up, right? Let me share with you guys a couple setups that I like, that I think can give you exposure to the market, that I think, look at CDN Road Warrior. He knows, right? He's talking about gold. That's one of the charts I'm going to look at. But I think one of the things you got to think about right now is diversification in your portfolio, whether that's, right, you look across the U.S. is getting clobbered, right? So maybe you got to look at some international stocks. And, right, if you have, say, a $100,000 account, $50,000 account, right, maybe just put 1-2% in there, right? Just put a sleeve. People call it a sleeve when they look at portfolio management. Put 2 or 3% to work somewhere outside the U.S. so you can have that exposure, because the U.S. just isn't working right now. I know it sucks to say it, right? I'm as much of a patriot as any of you in the chat, but there's other places to make some money. We got to go there, right? We don't get to tell the market what to do. The market does what it wants. So let's take a look here. Crane shares, KWeb, right? So look at KWeb against 35. I think you have a good opportunity to add some exposure. It's up 9% this week, guys. Right? Just imagine if you had 2%, right? You had a decent position in some international stocks that were doing well, right? That could really up your portfolio at this moment when, stocks in the U.S. aren't doing great, or you're in a large cash position and you want to follow some names. Another chart I want to take a look at is gold, right? So taking a look at gold, this is the 20-year monthly chart. The reason I share this is when you look at these big patterns, they can tend to run for a long period of time. You still want to manage risk, but if you don't have any gold exposure, guys, why not? Why not have some exposure to some gold names? Look at Orla, O-R-L-A. I don't know if I put that one in here. I didn't. Let's take a quick look at O-R-L-A. That's a gold miner that I really like. Let me share this tab real quick. Right? Obviously, it's ran, right? But maybe when it pulls back, you can get some exposure. But look, huge base, right? Huge base, huge base, huge breakout, and then we kind of ran, right? So I think gold looks decent. I think some of these Chinese names look decent. FXI is another one, right? Against that $30 level. We looked at this a couple weeks ago. I think I already have a chart edited in our CMT Lunch Hour. FXI. I do. Let's pull it up. Right? FXI, right? Edited this a couple weeks ago. I think Howard Lindzen asked about this one, right? CEO, right? So we had this down channel here, this right wedge, this falling wedge. And then boom, we broke out, right? And I said to manage risk against this $30 level. And here we are up 25, 26%, right? I had a small position in this, but it's better than every position losing money. So I would just say, guys, figure out ways to look for relative strength in the market while it's messy. I think, international and some gold, maybe even some silver. I think silver looks decent at the moment, XLV, right? Look at silver, guys, right? Why is no one in the chat talking about silver? Oh, it's boring, it's lame. Sure, but we have some clean looking charts here, right? This looks a lot better than the S&P 500 at the moment, right? Help hedge some of your portfolio during these rough times. Because if you can just lose less in choppy markets, you can lose less. That gives you more to make on the upside, right? When these names start to work again, right? And a lot of battles that the United States has won, a lot of wars, right? Retreating as a part of the strategy sometimes, because you got to regroup, right? Sometimes you got to regroup and get ready for the next move in the right direction. So silver, another name to take a look at. And then last thing I want to show you guys is I want to show you guys one more thing. One of the tools I utilize is market carpets, right? It's a quick, easy visual. You see them all the time on StockTwits and Twitter. But one of the tricks you can do, shout out to Stock Charts if you guys like the platform, but you can look at the 1 day, 2 day, 5 day change, right? So just look at the 5 day change and you can see, right? You can see the areas of the market where there's some strength. And so I know some people in the chat mentioned, right? Some people in the chat mentioned healthcare, right? There's decent setups in healthcare. Look at Medtronic, right? So I don't want to say there's always a bull market somewhere, because I think you should be managing risk and realize that like certain positions are probably going to get killed. But I also think there's a time when you want to just look around and see, okay, is there other areas I could be playing in? And it's pretty limited right now. Like a lot of things are down over the past 5 days. A lot of things are down over the past 3 months. Year to date, we're still holding on to some gains, but you look at the past 3 months, a lot of things are red, right? So it's just a tool you can kind of utilize to kind of see where there's some strength in the market. And like some people mentioned, healthcare, right? Like Medtronic is a name that looks decent in the healthcare space, right? Actually really like this chart. All right, what we think, chat? Look at Medtronic. We flipping the book, right? Against 92. Little Medtronic. I think that looks decent here. I think Medtronic is a name to keep an eye on. You have this basing pattern. Looks like it's ready to go, right? I think you still got to swing the bat if you're in the market. Something to look at is Medtronic. Last ticker, EWJ. I see someone mentioning Japan in the chat. It's a little messy. Showing some relative strength relative to the US, but I don't necessarily see a reason to be in it. If you want to be international EUFN, right? European financials, they're broke out at this point, but it was something you could have taken a look at. But overall, guys, it's a pretty messy market. I think, unfortunately, that's kind of the thing. I'll tell you that we talked about home builders 2 or 3 weeks ago, and right, you can kind of see the home builders, right? The market's following the home builders. Home builders are a big part of the market. People look at the price of their houses. People want to move. They want to buy homes. And when home builders, they a lot of times lead the way to the downside. And that's what we kind of saw here. Shared it a couple weeks ago. Go back and watch that video if you're curious. Another thing I'll highlight here is kind of like I said, a lot of people talk about nothing good happening below the 200-day. Well, the S&P 500, 400, and 600, which is when people say the S&P 1600, this is what they're referring to. It's messy, right? Most stocks are below their 200-day. So for you to expect good news when most of the time bad news comes out below a 200-day is silly. And then think about it from a geopolitical level. I'm not going to go too deep into that. But if I was a president, I would come out with all my bad news while people are still have Biden fresh in their heads, because I can say, hey, this is all Biden's shit that I'm cleaning up. It's going to take a little bit of time. And I would save all my other wins for the back half of my presidency. Then you have that recency bias. Because who of you remembers Biden's first year in office? What'd the market do, right? You don't remember off the top of your head. But you remember last year it did really well, right? So that's just kind of the thing I think about here, that a lot of bad news is coming out. The wall of worry is building. And so we want to look for that capitulation, which we're starting to see, right? We're starting to see some of those new high, new lows kind of break down, reach levels that are capitulatory, but we got to see price follow through. So that's what I have today for you guys. Yeah, manage risk in the S&P 500, right? If that's something you're playing with, I think 560 is the next level you want to manage risk against. And if we get below 560 and below the 200-day, it's risk management time, right? It's not about buying dips. It's about selling rips. And I think that's something we have to keep in mind. I don't want to see it. No one wants to see it, but truth be told, I'll be here next week. And so whatever comes out between now and then, right? Just keep your head on a swivel, continue to manage risk. I'll be putting out a post this week on Beehive tomorrow. Just go to my Twitter or go to my stock tweets, more importantly, and I'll have my beehive out. I wrote one last week about risk management, some of my thoughts around risk management, and right, it came timely because the market's continuing kind of to the downside. And so stay in touch. I'll be around. Continue to blast a chat with tickers. I'll be here next Friday with you guys. I hope y'all have a great weekend. Peace.